Hello everyone, George DeSantis with a look at the market uh, for the week ending March 10, 2017. And as we usually do, before we begin to look at charts, let me read the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. Consult a licensed professional investment advisor for investment advice. I'm not a professional investment advisor. Let's begin by looking at some charts. The first chart I want to look at today is the regression channel of the S&P 500 taken from software that I have from Best Choice. Sometime during the week or last week, I mentioned that the market was overbought here at the 90% line. I think a week or two ago, I mentioned that. And since then, it's pulled back to the 50% line. Notice that we gapped up, and I mentioned that in an email. We had gapped up here a couple of weeks ago, and then we attempted to close the gap, and we did just that. Now, on Friday, we actually bumped up from that 50% line to close a little higher, although the market has pulled back for somewhat of a correction. We'll see some other indications of this on some of the other charts that I'm going to show you later on. So this is one thing I wanted to point out. Now, what that means is that we do have a pullback, a regression, and then we are at the 50% line. So we have room to grow now toward the 90% line once again. So let's take a look at something else. Okay, now what we have here is a weekly chart of the S&P 500 on TC2000. I couldn't get the data for the usual software that I use, which is Supercharts. I couldn't get it today, probably available tomorrow, but I wanted to do this today. In any case, the indicators are pretty much the same. You'll see them here, except for the instantaneous trend line, and the closest approximation to that I have is the 30 weighted moving average, which is this green line. So this will do. Then we also have a 4-period or 4-week in this case exponential moving average equivalent to the Kalman filter. So as we take a look at this, we can see that these trend lines crossed here. The 9 and the 4 crossed above the 30. At the same time, if we look down at RSI crossed above 40. That was a signal for the uptrend here. Okay, percent R also bounced off the 50% line. So an MACD started trending up from that point. So we are in an uptrend on the weekly chart. And another thing to notice is that, as Rick Monteith points out in his on his website, eFuture Vision, when you have a complete bar closing above the upper Keltner line, which is this dashed white line, that's very bullish. So we should keep that in mind too. So let's take a look at the daily chart. We have some things to look at there that are a little different. Okay, so this is a daily chart of the S&P 500. What I did was I drew in the Fibonacci retracements here from this low to this high, and you can see that I sent you an email during the week saying that my interpretation of what was going on at the time was that we made a gap up here Friday, 2 Fridays ago, or was it Wednesday? I'm not sure now. And since then, we've been pulling back to close the gap. Well, we closed the gap, and then on Thursday, we have a nice hammer here, candlestick hammer. We actually hit we came pretty close to the 38.2 Fibonacci retracement level, which is a classic retracement level. It usually holds if this is just a retracement or correction. And on Friday we moved up a bit. So we went up a bit on Friday, And hopefully then this 30 weighted moving average will hold as support. Remember, we talked about the instantaneous trend line possibly holding as support. Well, now we have a setup here now. We pretty much have a setup that looks like we are ready to go higher. The Bollinger Bands are going into a squeeze. They're narrowing here, right? And so my interpretation of all of this is that I believe that we're going to get a squeeze of the Bollinger Bands. I think we're going to find support at the 90, at the 30 weighted moving average, and we're going to take another leg up. We'll see how that works out. Now, in the middle of the chart, MACD has trended down, and there is no divergence. So we'll see if we can now begin that walk up, that climb up here again, that MACD turns around. Now, Williams percentile hasn't budged below 50% for a long time, and that indicates that this trend is still intact. RSI 12 broke below the 60% line, but it hasn't breached the 40% line, and that's the key line, the 40% line. So it looks to me like the weekly chart is trending up on the S&P. We had a bit of a short pullback here now. We had a pullback the last couple of weeks from this gap up, and we closed the gap, and now it looks as though we're going to trend up from here. We'll see how that works out. Let's take a look at something else. And here's a weekly chart of the Nasdaq Composite. And what we see, it looks very similar to the weekly chart of the S&P. Not much difference. You can notice also that we had this complete bar above the Keltner channel, the upper line of the Keltner channel, that dotted line. And that's bullish. So you see that same sort of consolidation here that we had on the S&P. After all, the Nasdaq and the S&P tend to move in tandem with each other, with some variations, of course. MACD is still very bullish, as we saw on the S&P. A little bit of a pullback, no divergence. Williams percentile in bullish territory above the 80% line, in this case the 20% line, I'm sorry. And RSI 12 looking very similar to the S&P chart, saying that this trend is intact. So let's take a look at the daily chart of this composite, the Nasdaq Composite. So here's a daily chart, and we have a similar looking chart to the S&P. We had this gap up, we closed the gap, we found support at the 30 weighted moving average, and on Friday we had a little bit of an up move. So we can also notice Bollinger Bands going into a squeeze here, and usually we get more of an explosive move from the squeeze. And my bet is that since we've been in this uptrend, we're going to get another uptrend once we go into that squeeze. At the bottom of the chart here, we can see that MACD histogram actually shortened up here, and that's encouraging on a Nasdaq Composite. And also Williams percentile is holding its own right up here on the 20% line. RSI 12, it came down with the rest of the market, of course, but it held above 40 so far above 40. So that's encouraging. In summary then, we didn't worry to look at the monthly chart because there's no significant change. Both weekly charts of the Nasdaq as well as the S&P still look very bullish. On the daily chart, we saw that regression or correction back to the 38.2 Fibonacci retracement level, and now it seems that the market is getting ready for the next move up. So let's take a look at something else. So this is a weekly chart of the S&P on stockcharts.com, which shows us the impulse bars, the green, red, and blue bars. And what we can see here at the right side of the chart is that last week's bar turned blue, but what that indicates is that we are allowed to go either long or short off the weekly chart on the S&P index. Since we've had this nice uptrend here, we don't have a red bar. So I don't see any reason to be panicking here. We find that MACD is still, trend still above the zero line, is showing a lot of strength here. And at the bottom of the chart, percent R is in real bullish territory above 20. We saw that on the other charts. So let's take a look at the daily chart. What do we find there? On the daily chart, we see that pullback or retracement as we discussed earlier, and hopefully we find support here. And now we have a blue bar, so we're allowed to go either short, long, or short. It's your call. However, I'm not shorting this market. I'm not so bold. Okay, so let's take a look at something else on stock charts. So here's this chart from stock charts. It shows us the percentage of stocks above the 200-day moving average from the S&P 100. And so we can see that we have this 50-day moving average, the 200-day moving average in red, 50-day in blue, and we see that there isn't much change in terms of the number of stocks above from the S&P 100 above their 200-day moving average. So that's telling us that there isn't much, in my opinion, to be concerned about here. So let's take a look at something else. And here is one last chart that we look at today. It's the McClelland oscillator. McClelland oscillator. It's a measure of breadth in the market. It looks at the difference between advancing versus declining issues. And if you want to learn the exact formula, you could look it up. It's not very complex. But what I'm noticing here is that McClelland oscillator came all the way down and it reversed, just as it did here in November when this new uptrend began. Will the same thing happen here as happened here? We don't know. But it's interesting to note that when it became so oversold in a sense, that it began to trend up again. Well, that's it for now. We'll meet again next week. Have a nice weekend. And we'll do this again when we can next week. Bye-bye.